Hi, this is Sean Casey from Trade Canary, and I'm going to show you how I lost money on a winning Palantir trade. That's right, I turned a winner into a loser. And yes, it was stupid, but it seemed like a good idea at the time. And I want to share this with you so that you can understand what I did right, what I did wrong, and see how you might have done things differently in a similar situation. Please pause the video if you need to and read this disclaimer. It's very important. We are not financial advisors. We're not giving specific financial advice. This is for educational info only. And a specific warning, this video shares an aggressive trading strategy that only should be used if you're experienced and personally feel comfortable risking money that you can afford to lose if things go wrong, because they can. With that said, you might never make trades as aggressive as the ones you'll see in this video, but you should learn a lot, which is why I made this video, seeing how the market moves in a high volatility situation, how to analyze the situation, how to deal with the trade that's going against you, and what you might be able to do to turn a loss into a gain. I want you to understand my thinking, what I did. It was a very short time frame. Normally, you won't put yourself in this situation, especially if you're newer at investing. You don't want to be in this situation, to be forced to make quick decisions that you haven't made in a longer time frame before and had an idea like, hey, in this situation, I'm comfortable doing X, whatever that is. So the stock that I was trading, or the options on the stock I was trading, were Palantir. Palantir, you can see, going back over the last year plus, has been a real tear. It's been growing, growing, growing. You can see over on the right here, they had an earnings release and they gapped up here, and we're riding really high. This gets up to, in the 120s. And then there's this drop, and this is the drop that triggers this trading scenario. But stock has been doing really well. We love the stock. We love the company. It's got a very aggressive forward multiple of like 55 prior to this drop, which is a really, really high multiple. But the company's strong. Their customers are doing well. They're loving them. They've got a lot of growth in their future. Where the stock goes, I can't predict, but we really do like the company. However, on Wednesday, which is 3 days before I'm making this, February 19th, 2025, in case you're watching this later down the road, Palantir takes a big drop. The founder had announced he's going to start selling some of the billions of dollars of stock that he owns, and people freaked out. I mean, freaked out as in, oh my gosh, the guy's bailing, let's sell the stock. And so they did. And now the stock was at about 2:45 p.m., the stock was over 124. The stock comes down over 15 points to being below 109 in an hour. Okay, so it loses like 12 or 15% of its value in an hour. Boom. If you like a stock like this, and you can look at it one of two ways. This is a buying opportunity because now the stock has dipped, and since it's dipped, hey, here's a chance to buy it cheaper than 124, buy it for 109, or you can panic sell because everybody else is panic selling and get out of the stock. It's completely up to you. It all depends upon what your investment mindset is. There's no right or wrong answer. There's only what you feel comfortable doing. Okay. But in this case, nothing else had changed about the company. Its future prospects haven't changed. And I thought the price would bounce back some after the scared money sold. And I was partner Brian, who absolutely loves this company. And he, in fact, was saying to me, there's just no reason. They're jumping out for no reason. It's not like the guy didn't say he would never sell any stock. He had already said he's going to be selling some stock. And that's normally what people will do to diversify. Looking at the stock in the chart, it seemed to stop dropping when it hit 109. Right about 109, you started to see the trades stop down, 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 down. So I bought the $110 strike price calls. And what I bought is, for the expiration date of Friday, February 21st. So this is Wednesday the 19th. So 2 days away, I bought the calls would expire. It's a very short-term call option. It means it's either going to work or it's not going to work. I mean, maybe it's just going to break even, but the movement is greatly exaggerated because there's very little time value with the option. Right now, all there is the potential to be in the money because we're just out of the money at 110 and the stock's at 109. And there's the fact that it's got a lot of volatility, so that raised the premium somewhat. But at this point, you can see where we are. The stock takes the nosedive. And I said, I think this is going to bounce back. And in fact, you could see right here that it got down in this 109 range, and you could see the candles got green, and then it came up and it came back up. I'm going to show you more. Just hang on. I paid $3 to buy for 10 $110 calls that expired 2 days later on February 2/21. So in total, I paid $3,000 and fees. So it's like $3,006.61. So I have $3,000 into this. That's my total risk in this trade because I only am paying the risk of what I had the options. Again, don't make aggressive short-term trades like this if you're not willing to lose the money, because the whole thing could turn upside down very, very quickly. But I thought it would bounce. I would sell. I would make some money. I'd get out. And in fact, let me just go back to the chart real quick. You can see right over here, right? These green candles, this does hit and it bounces right as we get near the close. And I bought, okay, at 1546, 346, I bought those 10 calls. At 357, I sold half of them for $4. So that position I paid basically $1,500 for and sold it for $2,000, and I'm up $500 in 11 minutes. That's awesome. I am the smartest guy on the planet. And these calls closed the day at over $4, maybe about $4.20. So my $3 investment is doing really, really well. I'm up. I think it's going to come up overnight. People are going to digest the news and they say to themselves, what a bunch of idiots for selling this stock. We better get back in before it's back to 124. But you never know. On Wednesday, after it bounced, the stock closes at $112.06. So when we were trading during the day, we were at 124, came down here. And remember, I don't know, and you don't know ever in the market where it's really going to go, right? We're looking at this in hindsight, which we can be really smart about. But here's where I bought the 110 calls and sold half of them because I took some risk off the table because, hey, these only last 2 more days, right? So I wanted to take some risk off the table, but I thought this had room to come back more after this sudden drop, and then it came right back. People dove in and started buying. So that was my plan. Selling was a smart thing to do, to take a profit and lower risk. And it's important when you're looking at how you're trading to know why you do what you do. You might get the wrong result, but if you're doing things for the right reasons, then you're going to get results and you're going to be able to improve your overall results. Not every trade is going to win, and not every trade is going to win big. But if you know why you did what you did and you make a mistake, you can not do that the next time. And if you do something right, you can remember what you did. But you have to be really clear why you're doing what you're doing. In this case, I was taking half the risk off the table. I was getting back $2,000 of the $3,000 I had put into this trade. And I was positioning myself, hopefully, for a chance for a bigger pop when the market opens on Thursday. Again, I paid $3 for the 10 calls, so $3,000. My net cost in the remaining 5 calls was $2.02. Okay, they closed the day above $4. So my total risk at this point is $1,000. Okay, because I bought options, my risk was the only funds that I had invested. Okay, after selling the first 5 call options, so right now I'm at risk for $1,009.98. That's the most I can lose, right? I've taken the biggest part of the risk off the table, and I have the opportunity to earn more. But not selling all the calls turned into a really big mess. That turned this 11 minutes winning trade into a loser, because you can never know what the market's going to do. You can never know what people are really thinking. And that's one of the reasons why it was smart for me to take risk off the table, even if the market went the way I thought it was going to. Because, well, Palantir closed the trading session at $112.06. It then drops in the extended hours trading, comes back lower. And then Thursday morning, it drops. It opens at 106 and quickly plummets to $96. Now, I still own 5 calls at $110 that expire now. This is Thursday, so they expire Friday, right? 1 day left. They're now worth pennies instead of $4 plus, right? So my holding those calls turned out to be a bad idea, because I was holding them overnight looking for the stock to come back more, or at least not get crushed, and it got crushed. All right. I mean, you can see it dropped like a stone. You can see here, this is Wednesday's trading. When it comes down, it drops down, bounces off of whatever the low number was here, I think 99. Or excuse me, this is when it bounces off of like 109, comes out to 112, right? Then it drops down, opens at 106, and just comes straight down. It's like jumping off a cliff here. Probably a lot of programmatic trading, day trader to get in this. Hits about $96 at the low around 10 a.m. So there's a technical term for this, and it's called "this sucks." And that's the position I was in. Now, I only had $1,000 to lose, but I had maybe gotten greedy. I could have just taken the $1,000 win, but I wanted to go for more, and I went from a winning trade to a losing trade, and that's how you can do that. Now, if the stock had opened at 120, I would have been a really smart guy. I wasn't a smart guy here. Okay? I could have sold all those calls for $1,000 profit, in the 11-minute time frame, less fees. I would have made whatever $990. And that would have been smart, and I could have gone about my way, no stress, no problem, no worrying about the fact that Thursday I was coming down with the flu, felt like crap, still we're going to deal with this, and I don't like to lose. Really hate to turn a winning trade into a losing trade. This is where we get real aggressive. It was aggressive doing the 2-day calls, but there was a good reason for that, and if it started to go against me, I could have sold them out and got most of my money out of it, right? But in this case, I'm going to do my partner, Eric, who our Trade Canary members have heard a lot from on very advanced strategies in our membership, what he calls mathing my way out of the losing position. Now, mathing really is just the term he uses for the fact that you can invest more money as this is falling on the basis that it's going to bounce up quickly and come back. And as long as we're not overly aggressive and we have enough time for it to bounce, we can fix the problem. Right now, I'm in a really short time frame, correct? It's Thursday. Everything that I own is going to expire on Friday. It also means it's going to move the most with the stock moving because there's no time value between now and Friday, right? Normally, if you were looking for a stock to move, you wouldn't have such a short time frame. And the things that I'm going to show you that I did, you can see how you could apply these if the calls were out a month or 2 months or 3 months. And if I'd realized how nutso people were going to be, I would have gone and traded calls with less risk that were out further. But again, I went into this thinking, I'm going to do this quick and get out. And then I didn't get all the way out of it that quickly. So Palantir opens at 106 on Thursday morning. It looks like a buying opportunity because, again, it's down $18 from its high of the day before, right? And people were really happy buying it at 124. Okay. Also, now that it's down more, looks like a buying opportunity because I didn't know it's going to 96. You know it's going to 96 because I told you and showed you. I didn't know it was going to 96. So when it opens down, I immediately jump in and buy more calls. In this case, to get closer to where the stock price was, I bought 105 calls. And in 931, okay, right after the market opened, I jumped in and I bought 10 calls at 260 each. And then 953, as it came down more, I bought 15 calls at $1.75 because I wanted dollar cost average down. That got my average cost down to, I think, $2.09, something like that. It'll come up here in a little bit. I do that because I think it's going to bounce off 106 and I'm going to be fine. And maybe I'm not going to fix my 110s and I'll lose money there, but I can make money on the 105 calls. Again, these are Friday expiration because I'm looking for this to happen very quickly. And this obviously falls right off a cliff. Within half an hour, the stock is $10 lower. And these 105 calls are not looking good at that point, right? Because this thing has come way, 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 way down. Not my finest ever trade. Now I'm in this, I think I have the total. So the stock goes to 96. The 105 calls and, of course, the 110 calls have lost most of their value because they expire in just one day on Friday. I have potentially dug a very big hole here. Again, this is why I tell you this is an aggressive strategy, not for the faint of heart, and you got to be able to make quick decisions without freaking out because things can get ugly quickly and turn on a dime. At this point, with the additional calls that I bought, I've got $6,251.50 invested in the trade in calls that expire in just one day. They're very volatile. Even though they've dropped, they still have some value. I don't know what part of that, but $2,000 or $3,000 worth of value. All that money is not lost, but it is invested, and it's at risk at that point. As the stock stabilizes, because all of this happened, and I wasn't sitting just watching the stock all day, and as that happened, the stock comes back up, bounces around, and I realized that the stock may not come back by Friday, by the next day, and I need some more time. Instead of buying more calls that expire on Friday in case this doesn't come back fast enough, because I still believe given a little bit of time, it's going to come back up and get to a new high at some point in the near future, I buy 100 calls, the $100 strike price calls, and I buy the 2/28 expiration date, which means that's getting me 8 days. That's an extra week, which at this scenario, the difference between a day and 8 days is a big difference, right? Long time for that to come back by comparison. So I bought 10 $100 calls at 435 right in here. Obviously, I didn't get it at the low. I didn't make a perfect trade or anything else, but I did buy these calls, and buying these calls was the second smart thing I did. Buying the original ones was smart. Not selling them, not so smart in hindsight, right? But buying these are the ones that will actually make a bigger profit in the end, even though I had to chase it all around, because I'm giving you a preview. If you're just trading this yourself, you only know what I know right here. You don't know that this is going to work its way up and back down again and up again and back down again through the rest of the week. Because Thursday ends right about where it says calls, right in here. This is Thursday's close, and this is Friday's trading. So I only know this right here. And at this point, I think the stock's still going to come bouncing up. Again, I buy near the money, so I'm buying, the stock is somewhere near $100. I buy the $100 calls and pay $4.35 a piece for them. Now I'm in this more. Now I've got $10,608.11 invested. But again, this money is at risk, but I'm not out all this money because all of these have some value. There's still thousands of dollars of value collectively in all of this. And the $100 calls have 8 days until expiration, which again is not a really long time, but in the basis of how this stock is bouncing around, that's a long time for them to get a chance to work in my favor. I've got $100 calls on a stock that 2 days before, that the day before was at $124, right? Wednesday midday, this stock's $124. Thursday, it's at 96 and around 100 when I bought these calls. Again, I'm thinking it's going to move up, right? So I want you to understand my thinking, because as you're looking, normally you won't be doing this quite so much compacted together, but as you buy stock, you invest in options, and you've got time. Some of the calls that we talk about that we're buying, the options that we talk about with our members, are out a year and a half, almost 2 years. With those, if the trade moves against us and we want a dollar cost average in, we have lots of time to make that decision. But it's the same thought process. Do I go in, put in more money, get a lower average cost? Then when it comes back, hopefully, and gets higher, I could sell some, take some money off the table, but being invested in the position I wanted to be in for less money. These are the things you can do that math your way out of a problem and make things better for you. So at this point, you can see I still own the $110 calls. Thursday opens down 106, bounces to 96. I start buying in here, okay? This shows you where I bought the other calls. I've got this all on one screen. Now, Palantir, okay, gets back up to $104, so I start selling because I want to get money off the table. Again, the next day, these options expire. If I'm not in the money, I'm really in trouble, so I want to get some value out of these. And I'm able to sell at 1:57 p.m. I sold 5 of the $105 calls for $210. That's basically break even after fees. Okay, my average cost $209 or $2.09, right? So I started working my way out. I sold 5. And the reason I sold 5 was I wanted to see if it would trigger and I could get that. And then I started selling more and the stock was moving up because I need to get money off the table. Right now, I'm just trying to get back to at least even and not bury myself in this very fast moving trade. And then the next thing happened, 206, the stock kept moving up. And I decided to sell my longer term calls because I could get 720 for them. And that locked in a big profit. I got $2.85 a profit per call. So with 10 contracts of 100 shares, that was $2,850 profit minus fees. That, of course, makes the entire thing in the end a winning trade. And that takes all the risk off the table that I could wait a little bit on some of the other stuff. But I didn't wait long. At 248, I had put the other 105 calls out. I had 20 of those left. I put 10 out, sold those for 223, made 14 cents, which isn't a huge amount of money, but it's $140, right? 258, it went up further. I sold 10 more for 249, made 40-cent profit. And then the last thing I still owned was the $510 calls, and I sold those for a massive loss per call, 71 cents. And happy to get out of them because this stock was not going to get to 110, in my opinion, before Friday. And so I ended up with a 229 loss there. And I'll get to all this math and how it works. And if you need to pause the video so you can see this, I wanted to get this all on one screen so you can see how crazy this was in a very compact time frame, all the different trading that was going on. Normally, you're not going to be putting yourself in this position, and especially not until you're experienced. But the same concept applies over the course of weeks or maybe even a couple months as you're investing in an option that's longer term or a stock, and it's moving up and down, and you want to make the best use of your money, and you become familiar with the stock and how it moves, and you think that you really have a good investment and you want to put more into it when it backing up and allow you to dollar cost average in, which is a great thing. Now look at the closing prices on Palantir. Tuesday closes at 124.62. Wednesday, 112.06. Thursday, $106.21. And Friday, it's down again to $101.34. Anyone who held the $105 and $110 calls, those would have expired worthless. The last trade on the $100 call that was the 228 calls that expire a week later on Friday afternoon was $4.85. So that would have been a slight profit over the money I paid for it, but not the $7.20 that I sold it for. And I put this on a chart. You can see how this bounced all around, and this is common, just usually not in so tight a time frame. But literally, Friday it's here, or Tuesday it's here. It's here up in this area until 2:45 or so in the afternoon on Wednesday. Starts falling, bounces up. It's when I could have got out. It was easy. Comes down, opens up at 106, drops to 96, and then starts bouncing its way gradually up. And then it's moving itself gradually back down again, which I didn't think it would do. But because I was on a short time frame, I got out of this. Now, if I didn't have the flu and wasn't completely messed up and paying attention, because I didn't go back and look what happened on Friday until the market had closed, I really would have bought more calls, even if I bought them out a couple of weeks, because I think that this would have moved back up again. We'll see what the future actually holds. I'm recording this on February 22nd. So I have no idea what the future holds, but I believe that it will come back up again. But what a crazy set of gyrations. And by kind of following how the market's letting me in and out, even though I made some bad buys, buying right here, and then the stock just nose diving, that wasn't a great feeling. But when I kept believing it was going to come back up, and then it did, but then I started getting out, right? When it came back up, I got out. I didn't try to get the high here. I have expiration on Friday, so that was my opinion, was I'm going to get out. And especially when I could sell those one set of calls, the $100 ones, for a profit that would cover everything, I got most of the risk off the table. As I told you from the beginning, I turned this winning trade on Palantir, where I could have sold and made basically $1,000 in profit, into a loss. After I was done selling them, I paid $3 for them, sold 5 of them for $4 and 5 for a whopping 71 cents. Congratulations. Net loss of $658.30 for the $110 calls, which given the opportunity, if the stock had spiked, not the end of the world. I really wouldn't have been that upset if I'd lost $658, because if the stock had spiked on the second day, I made the trade for the right reasons. If it had kept going up and it had opened up at the 112 or 115 or 117, and I was able to sell these other 5 calls for like $7, then that would have been a brilliant trade. In the end, it wasn't a brilliant trade. It moved against me. But since I took some of the risk off the table, the worst thing that happened here is I lost $658.30. But because I was aggressive, and it's really aggressive in such a short term, I wouldn't consider aggressive. If I was playing with calls that they're even 3 or 6 months out, I wouldn't have think that this was aggressive. It also wouldn't happen boom, 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 boom so quickly within a day or two. On the second position, there's a couple of buys and then a lot of sells that in the end, all those 105 calls made $511.73. So almost breaking even with the other position. But you could see I bought them for $260. A few minutes later, the stock started dropping. I bought more at $1.75 to get my average cost lower. And then when it started to come back up early in the afternoon, I sold them for $210, for $223, and for $249. And the total is this $511.73 that I made on those call positions, getting in and out of them all in the same day. And the third position, this is the one that became the winner, really, for the whole trade, is the $100 calls that were expiring on February 28th, a week later, because I bought those for $4.35, sold them for $7.20, and made $2,836.55 for the 100 calls. And if you add all that together, the loss, the 2 profits, the net profit in the end of all of this craziness is $2,689.98. It wasn't pretty. It was crazily chaotic. And I don't suggest you do this until you're comfortable doing it. But if you took this same strategy and what I did, and you spread out the time frame where the stock movement is going over a course of weeks, you can apply the same kind of strategies. You're in the stock, you know how it's moving, you like the stock, it comes down, you buy more of the same calls or a lower priced call, again, giving yourself time for it to work. Stock starts moving back up, you sell some of those that you have at a profit to get some money back in your pocket. Always good to keep your money close, and then you can let the longer ones run, looking to make a bigger profit. I hope you've learned a lot from this. I went to a lot of work to make this video. How could I have traded this opportunity with less risk? Well, the obvious thing is I could have just bought Palantir stock. I could have bought it when it dropped to 116. I could have dropped it when it dropped to 106 or 105. I probably could have easily, if I'd been buying more when it dropped into the 90s, I've gotten an average cost of $1.05 or less to buy more stock that was just $124 the day before. I could have bought it at a discount and bought more stock. I owned enough stock. I didn't want to buy more stock, but I could have done that. And then I could have looked for a short-term swing and thinking it's going to come back to 124. And I could sell that stock for a $19 profit per share. That'd make about 17, 18%, maybe in just a couple, 3 weeks. Who knows? I'm not telling you that that's going to happen or dive in and buy the stock, but it could. Or I could hold the stock for a longer term attempt to get an even higher price, thinking that down the road, this stock will be much, much higher. And it might be. I like this stock. I like the company. I like what they're doing. I like their positioning. I like their contracts that they have with massive corporations and the government, who every time they use Palantir seems to find a way to make more money and therefore is investing more with Palantir. Number 2, this one, to get the leverage of options, which is what I wanted, because I wanted to leverage options to get the quick move up. I could have bought call options with expiration dates farther in the future. That would have provided more time for the stock to increase in price, right? For it to come back. I would not have nearly had the same amount of stress and pressure when I was expiring in a day or two, if I was expiring in 8 days or 3 or 4 weeks. And in fact, just pulling this out, this is the Friday trading on February 21st, how much this stock was moving, how volatile it was for the options for a week later. So with a week to go, this option, the $100 strike that expires February 28th, the same one that I traded, in fact, had a low of 445 and a high of 1050 on Friday, which is yesterday from when I'm making this video. And the last trade was at 485. You could see the stock was all over this place on Friday. So there was a lot of opportunity here to get a big swing, even with another week to go. I really didn't have to go as tight as I did to get the sharp movement. If you got to March 21st, which would basically be a 4-week time frame, you could see 27 days because I pulled this screenshot today on a Saturday. You can see even this had a pretty big movement. This is the $100 call that expires on March 21st. And the low in this, 795, the high 1340, that's what, a 50 or 60% swing. And you've got 4 weeks for the stock to move back above $100 substantially. And if you wanted more leverage and you thought it's really coming back, you could have gone down to something like the 110, where the low you could be in is 404, the high 770, right? That's a much bigger swing. That's maybe like 80%, 85, 90%, right? Difference. So you could get a lot of leverage even going out 3 weeks, 4 weeks. I didn't do that. I was just going in for the short term, and I had to make a fast decision because the stock came down and it was bouncing. I had to pick something to buy. I picked the short term one. Again, it was brilliant to start with, and then I lost money on a winning Palantir trade. I did manage to do that. And then I mathed my way out of that loss with aggressive trading. Don't for a minute think that you should dive in and try to do this if you're newer at investing. But in the longer run, you can do this on different stock and options because you can basically lower your cost of being in these trades. And then if the stock moves in the direction that you expect it to, you're going to be rewarded. And then like I did, you saw, I didn't wait until the market came back to the perfect number. And I'm like, oh, it's back to 124 and I'm going to sell everything. Once I started getting things that I could sell at break even or a profit to get money off the table, when it bounced, you saw me start doing that. Okay? Because I had been aggressive in getting myself into the losing position. I needed to not be aggressive with something so short term, but get the profit and get it off the table. I hope this has been educational and helpful to you. I think it's fascinating to see how these things work out. Now you've got this video that if you're looking at this and Palantir hasn't traded more yet, you're early in looking at it, you can look at it in a month and see where Palantir goes from here and see if you'd come in and bought at this time and just waited. What would have happened to those March 21 calls? You've got the screenshot in the video. You can see where they end up down the road. If the stock goes back to 124, then the March 100 calls are going to be worth at least $24, right? Because they'll be in the money $24. So that would be a great buy if that was the case. And I personally am going to be looking to see where this stock opens on Monday. And if it's going to be down closer to 100, I'm going to be looking seriously at buying some calls and give myself a little more space than one day to make that trade. I wish you guys all your success in investing. Sean Casey from Trade Canary.